Good morning. My name is Julia Wojciechowska, and I am an arts and sciences student at UCL. And this is Maximilian Mucha, who also studies at UCL, where he reads economics. This year, we are again honored to host Prime Minister Marek Belka, who is currently a member of the European Parliament. In his career, Professor Marek Belka has held several public positions, both nationally and internationally. He is most widely known as a former Prime Minister of Poland and the President of the National Bank of Poland. However, he has also served as the director of the International Monetary Fund's European Department and worked in Iraq, where he supervised currency reform and the creation of a new banking system. And that is really just a very short summary of his experience. Prime Minister, welcome to the UCL Leaders Conference.
Thank you, Julia. It's a pleasure. It's a pleasure to be with you, even virtually. And I hope that we'll have a good exchange, a big hello for all the participants, Polish students in England mostly, I am.
Professor Marek Belka is definitely an expert on global finance and monetary policy. And in today's conversation, hopefully, he will share with us some of his insights about the central banking and the current economic situation. So maybe without further ado, let's begin with the first question, which is about inflation. Jerome Powell, Fed chairman, recently announced that the Federal Reserve Bank will ignore short-term inflation jumps and stick to its stimulus plan in 2021. What is your view on this approach, and do you foresee a similar policy being implemented in Poland?
Well, first, it is hard to be afraid of inflation when you have actually ultra-low inflation sort of neighboring at deflation. If you look at the Eurozone, it is the Eurozone experiences an inflation rate below 1%. In the US, it is slightly higher. Well, even in Poland, which is a small currency and vulnerable to monetary shocks, inflation is well somewhere around 3%. So, well, in a time of big crisis like this one, as the consequence of pandemia, when the immediate problem is the loss of jobs, massive loss of jobs, or a potential of a big job losses. When you have basically a disaster for certain industries, especially those industries that rely on people-to-people contact. Well, it is difficult to be afraid of inflation, especially when it is very, very low. In fact, there are opinions that we are going to have ultra-low inflation rate for the next 30 and even 50 years. Let me quote Meghnad Desai, Lord Desai, the former chancellor of LSE, or neighboring school. He wrote an essay in which he predicts 50 years, yes, 50 years of ultra-low interest rates and ultra-low inflation. Well, this is the general mood. But well, are the mainstream economists, because this is a mainstream economy, are the mainstream economists wrong this time? Well, we cannot exclude a situation in which sentiments change radically. People start spending money, and we can have sort of a return of higher price dynamics. Some people, however, point to a structural change in the global economy, and one important feature of the global economy is aging. And it's not only Europe, it's not only Latin America and Asia. As a matter of fact, Africa is the only continent where demographics is, let's say, exploding, and you know, people who know the matter say that the demographics in Africa will also change, so that by the end of this century, we'll be having a stagnating global population. What does it mean for economy? Well, it means that the people behave differently. They save more. Well, I am one of the examples. Older people save more. I save quite a lot. I don't know what for, but I do. Maybe for my children. But translating it into a global, let's say, picture, we see that pumping in enormous amounts of liquidity, enormous amounts of money, does not automatically translate into price pressure on prices. Well, of course, if I look at Poland and compare it to the Eurozone, of course there is certain difference. Number one, Poland has a fairly recent experience of inflation, so the people have not yet forgotten about inflation. So there is this potential for the sentiment to be changed easily and quite fast. Well, when I look at the policies of the National Bank of Poland, they are basically following the big central banks like the ECB or Federal Reserve or Bank of England, to be nice to your hosts, but this time, contrary to what we observed in the crisis of 2008, the financial crisis, emerging markets, and Poland is sort of on the brink of being classified as an advanced economy, but sometimes we are still classified in the emerging markets category. So these countries have followed big banks in this monetary easing, in purchasing of assets, basically helping the fiscal policy to pop up the level of business activity. Same happens in Poland. I'm not criticizing it, but I'm observing only that if we were within the Eurozone, we would be more comfortable in the sense that that the probability of inflation falling on us would be much smaller. That's what I have to say. Probably I was not, let's say, straightforward in answering your questions, but this is what economists all over the world say these days.
Okay, so you kind of indicated that if we were to be in a Eurozone, that would probably mean like less reason to be concerned about the increasing inflation. And I remember that you kind of changed your mind on this because like a few years ago you indicated that Poland was better off outside of the Eurozone during that global financial crisis. But would you like be in favor of Poland actually implementing euro?
Okay, well, say 10 years ago, or I was against Poland rushing into the euro. Rushing. Not that I didn't recognize the ultimate necessity of joining the euro, but remember, or you cannot remember, but 10 years ago, 2010, 2011, it was a big crisis of the eurozone, and it's only the resolution of Mario Draghi who saved the euro. And there is very little exaggeration in what I'm saying. He virtually saved the euro by remembering, saying, we will do whatever it takes, and believe me, it will be enough. And he convinced the markets. The sentiment around the euro changed, but still the euro was in crisis. Well, it would be rather, let's say, adventurous in that situation to be pushing into the eurozone, although countries like Lithuania or Latvia, well, very small economies, they decided to join the euro no matter what. And it was not bad. It was not at all a bad idea. We thought in Poland that we are a sufficiently big economy and big currency to be on our own. We were confident that our monetary policy was proper and well balanced. I still believe so. And most important, there was this episode in 2008 and 2009 when the zloty weakened in a defensive way, so to say, thus providing a shield for exporters. I also shared this view. However, I was already then a little bit doubtful about this argument, because zloty in 2008-9 weakened, but mostly because in the run-up to the crisis in the years 2006 and 2008, there was a huge bubble on the zloty. The zloty strengthened immensely. I remember a moment or a longer period of time when the US dollar cost 2 zloty, and same went for the Swiss franc. With the euro, it was 3.4, I would say. And nothing happened with the exports, as a matter of fact. The exporters did fairly well, but we thought that, well, if a crisis comes, then zloty will sort of automatically react by weakening. That's providing an additional, let's say, line of defense for the economy. Well, look what is happening now. The National Bank of Poland is openly admitting it is trying to weaken the zloty. As a matter of fact, it's wrong. It's wrong. It should not be done when you are a member of the common market. One of the ironclad rules in common market is that you don't manipulate your currency. Well, Poland is small enough, although this is not necessarily true, because we are one of the biggest exporters in the European Union. So weakening zloty openly, or trying to weaken zloty openly, is against the rules, against good behavior, so to say. But is it efficient? Is it successful? Well, I doubt. At some point, well, before this exchange rate, foreign exchange intervention took place, I remember the exchange rate of zloty was 3.45 to euro. Well, now we have 3.51, 3.52. What the hell? Is this a big difference? It's nothing. It's 1% or maybe 1.5%. So zloty is inherently weak, and to weaken it even more is unnecessary for the exporters. It's adding to inflationary pressures, or at least potential inflationary pressures. And as I said, it is a bad behavior in the common market. So I think that Poland would do quite well within the Eurozone. I think, well, I have lost a lot of faith, a lot of confidence in Polish macroeconomic policy recently. So being in the Eurozone would, let's say, help us prevent our own mistakes. But it is not easy to persuade people that we should go to Euro because we are doing well with the zloty. And the narrative that our authorities pursue is, well, we should not lose our national zloty, which is the symbol of our sovereignty, and so on and so on. So I think that as long as inflation is slow, although it is not very low for the people anymore because of inflation of foodstuffs. I mean, price inflation of foodstuffs. But as long as inflation is not worrying, the chances to persuade the people, the citizenship, to drop zloty in favor of euro are slim, so to say. That's it.
So when would you think that there's like a right, would be actually like a right time for us to implement it? So like it's definitely like it would be probably like beneficial for our economy, from what I understood, taking into account our current macroeconomic policy. But like, I don't know, do you see us like entering the Eurozone in like 10 years? Like, is it even safe to do that, like kind of in this kind of, you know, uncertain times that we have now? Like,
well, these are uncertain times for everybody, not only for the Eurozone, not only for the United States, but also for Poland. I think that our economy is strong enough to do well in the Eurozone. And I think joining the Eurozone would do us no harm and would bring some, let's say, some benefits, not major benefits, because the major benefit for us in Poland is really being in the common market. We are well, we haven't really realized until quite recently that export is the main driving force for the Polish economy, and we have a major surplus both in trade and in services with the European Union.
okay. So you kind of didn't still answer like the question, like just about like the when. So like if everyone agreed, let's say like as like for our like Polish citizens, they would be in favor of entering the Eurozone, like should the government make the move? Like if that was
Well,
like,
but this
like
government is deep in heart deep down it's anti-European. It's a Eurosceptic. Skeptical. And you know, being in the Eurozone means that you are ready for further and deeper integration. And this is what Polish authorities simply don't want. And it's not just, well, there is this propaganda of Polishness being, let's say, diluted in the European Union. Well, I see how diluted you are, and your colleague, which is of course nonsense. But this is the actual, let's say, propaganda, I would say, and you cannot do it. And as long as the argument for the euro is not very strong, I mean, at least economically, it is strong politically, it is strong in security terms, but you know, the people, as long as there is no war, and as long as there is no Cold War, even not hot war, it's Cold War, people don't think about it. They are happy with zloty, plus they are fed with nonsense theories that well, some people, you wouldn't believe that some people think that if we join the euro, we would earn in euro, but four times less, of course, but the prices will stay the same, but only denominated in euro. So quite nonsense, but this is, come on, 30% of Americans think that the earth is flat, and about 30% of people in Poland think that there is a supranational government that is basically controlling us, and the QAnon, yes, they think that that there is this clandestine, deep state that basically deals with eating children.
Okay, thank you, Prime Minister. And maybe one more question about inflation. You mentioned that Polish people still remember inflation in 1990s, and I think it's a very valid point. And in case if, for example, National Bank of Poland announced it will not stick to inflation targeting in short term, and in addition to claiming the openly wanting to devaluate zloty, which will mean that the imported goods will be more expensive. Could this be potentially a recipe of inflation getting out of hand?
I doubt, because the international environment is different. So you know, there is nowhere we can import inflation from. Instead, we import deflation. So this mitigates our internal inflationary pressure. Well, this is a very comfortable situation, in fact, but it will change. So we are, you know, we are trying something which is untested, basically. The general opinion of mainstream economists is that, well, okay, there is danger of inflation, but the danger of mass unemployment is much bigger, much more immediate, and it's not only economically and socially devastating, but it's also politically destabilizing. I mean, people are looking at what has happened in many countries of the world with the right-wing populism gaining strength. Nobody wants to help this wave of populism by letting the economy go down the drain.
Okay, thank you. So now we'll move on to the topic of negative interest rates. And currently, interest rates in Poland are close to zero. And if we faced another economic downturn, for example, in a few years perspective, should the National Bank of Poland, in response to that, introduce negative interest rates?
Well, negative interest rates. Well, let's look at those countries that have applied negative interest rates. We don't see, well, first, so far, negative interest rates haven't caused like bank runs, like a big drain of deposits. But to be honest, well, the first banks that have applied this policy was the Riksbank in Sweden. But even in Sweden, the banks didn't apply negative interest rates to retail deposits, to smaller deposits, deposits of households. Rather, it was applied to wholesale deposits. Well, when a big company keeps a deposit of 100 million euro, it does not really have an option to change it into current into cash. It has to either keep it as liquid money in the bank, or try to find some kind of investment. What we are observing is that the consequence of negative interest rates is uh, asset bubble, asset price bubble. Well, the assets, especially stocks, but also real estate. Well, if you don't accept getting a zero interest rate or even negative interest rate, then you start investing in on the stock exchange or in real estate market. Well, let me give you one number here. In Poland, 70% of all new apartments and houses are paid for by cash, with cash, no credit. So mortgage credit is relatively limited in Poland. Well, this shows you that the people are avoiding productive investments, so to say, but buying houses to in the expectation that this will somehow preserve value. Negative interest rates also. Well, what is the main purpose of negative interest rates? Well, it is the willingness on the part of the central banks to push commercial banks into more active credit policy. Well, if you are losing money by keeping it, you have to borrow to lend this money to hopefully to the businesses. In fact, we see a certain pickup of bank credit in Europe, in the Eurozone, but not in Poland, as a matter of fact. So as long as this does not destabilize the financial system, and as long as it stimulates bank credit activity, well, then we can live with it. But But this basically changes the business model of the banks. The banks well, they have to earn money. Without it, they are losing their capital adequacy ratios, and they are losing the ability to extend credit. So if they cannot earn money, make profit on credits, then they will increase commissions, all kind of special, let's say, tariffs, markups, what have you. So one way or another, the people will have to pay for it. Certainly, I'm not advocating the negative interest rates in the case of Poland. This has no proper effect. Credit, especially investment credit, is stagnating. We can discuss what are the reasons, but even ultra low interest rates do not help credit and investment activity. And there is a special twist in the case of Polish banking system. We have a non-trivial sector of cooperative banks, small cooperative banks. They rely very much on the interest rate differential, and besides, they have little experience and little expertise in risky investment. So if they are pushed into those risky investment because of the ultra low interest rates, well, some of them may get into trouble, and this is happening. So yes, it may happen, but I am not advising it at all.
All right. Thank you for your answer. And I think there are two main important points. First, of low interest environment. First, and drives real estate prices, which in these times prevents many young people from purchasing their housing. And secondly, you also mentioned banks increasing their fees, and also cooperative banks struggling. And don't you think that low interest rates in low interest rate environment is hurting ordinary people and exacerbating inequalities?
Well, this question has been asked quite frequently 10, 11 years ago. I remember discussions in the Bank of International Settlements in Basel in Switzerland, which I visited regularly every month, or in the European central banking system of central banks. We discussed this issue very frequently, and well, the prevailing opinion was that, in fact, the very low interest rates were meant to help young people, but they acted in a different way. Why so? Well, very low interest rates means that mortgage credit is also inexpensive. So hopefully, younger people would be deemed by banks as creditworthy. So the mortgage credit would be accessible. However, if we go too far, this produces speculative bubble on the market of real estate. This is what we have just mentioned. Houses are more and more expensive. People who have cash, and these are mostly older people, they buy. They avoid credit. They just buy apartments and houses to rent, or just to have, so to say, or to give to their children. So if you are unlucky and you don't have a well-to-do parents, this becomes more and more difficult to buy an apartment, even if mortgage rates are low. The prices of apartments and houses are going up. So something that was meant to help the younger generation is not really helping younger generation. This is one of the side effects of the ultra expansionary monetary policy. But of course, there are arguments for it also. Without it, we could have a massive unemployment, and this is not good for young people neither. So there is always a trade-off, and this is a very dramatic trade-off.
All right, thank you. So maybe one final question. Do you think that monetary policy was effective during the COVID-19 crisis? Because the main aim of monetary policy is to lower interest rates so that banks borrow more to businesses, consumers. However, where everything is closed, there are few opportunities to invest. And do you think, for example, that fiscal policy should be preferred in that times?
Well, I cannot help comparing the current crisis with the crisis of 2008-9. In that case, fiscal policy also tried to be expansionary, to be supportive of the business activity. However, very soon, and the Eurozone was a glaring example in this case, very soon it turned out that some countries could go bankrupt, simply. And that the fiscal policy was seen as having very strict limitations. So the monetary policy took the burden of defending the economy from the crisis. Ultra low interest rates, asset purchases, pumping in liquidity into the economy. So this was in 2008, 9, 10, and onwards. This time, you can say we have a more balanced policy mix. Monetary policy is still ultra supportive, but well, what can you do with the interest rates if they are already zero or under zero, yes, below zero? So there's not much to be done. So in this case, it's the fiscal policy that took over as the main instrument against the crisis. And well, we see that governments of all advanced countries and basically all countries are pumping in, well, increasing expenditures, basically, supporting incomes of both employees and employers. Monetary policy is helping this because in many countries, or in most jurisdictions, as we would say, because Eurozone is not a country, but it's a jurisdiction, the monetary policy helped the fiscal policy in buying out, in borrowing and lending money to the government. Well, so we had a massive case of monetary financing, something that would be an anathema 20 years ago. This is today, it's a commonplace, and for the moment, it is largely successful. We don't have massive unemployment, at least in Europe. In Poland, as a matter of fact, according to the international measurement standards, the unemployment rate increased just marginally, and well, it increased in most European countries, but by not as much as we could have feared. So, well, we should not complain too much. We should worry about the future, but we shouldn't complain what has happened so far.
Yeah, I think that's a very good way to kind of come to an end of our interview on this more positive note, I guess. Is there anything else, anything more you would like to share with our participants?
Well, that the times are uncertain. The uncertainty is one thing certain. So the only way we can successfully deal with it is to prepare with a good education. Stay agile, stay prepared for all the surprises. There may be also nice surprises in store for you. Thank you.
Thank you.
Yeah, thank you for your kind words, and that was very inspiring. We also are not only immensely enjoyed our conversation today, but I guess it has also fueled our curiosity about economics. And I've written down so many things to search. So again, yeah, thank you for taking the time to join us. And yeah, we hope you'll join us again sometime soon.
Thank you.